What in the heck just happened? If you did not watch that earnings call, or maybe you did and you're a little confused on what you just heard, we're going to break it all down for you. It does not sound good. Elon just threw a lot of uncertainty on the economy, on Tesla's expansion plans. Just overall, one of the worst earnings calls I have heard probably ever. And there's obviously a reason. There's a lot of geopolitical problems out there. There's a lot of economic problems out there. But Elon really just threw it all to the wolves here in this one. So we have your full breakdown of all of the notable quotes that Elon said on the earnings call, some of the big ones that affected Tesla stock, specifically this one that caused Tesla stock to go negative in the after hours and continue to fall, currently down about 3.5%. We have all of that for you and much more. The numbers for Tesla earnings, they were not great, but not all too bad. Tesla is now sitting on a record amount of cash. So if the ship does go through turbulent times, as Elon says, Tesla will not sink, but maybe won't be so great. Yeah, that was a weird one. We're going to go ahead and get into all of this information. We do have Fed Jerome Powell speaking tomorrow, and I also want to give you guys a breakdown of that, potentially what to expect. So hit the like button if you own Tesla stock, if you're a little confused after what you just listened to, as well as subscribe to the channel if you would like to be confused with me. At the very least, stay confused together each and every single day. Okay, so first things first, if you guys are not following the X account, I kept you guys up to speed throughout the entire call. Everything that was important, we put out in tweets. Now, this one, the first tweet, basically the first thing he said on the earnings call is what sent Tesla's stock down big time. Elon Musk said, quote, "It will take 12 to 18 months for the Cybertruck to be a major contributor to free cash flow." And I did highlight Tesla stock really selling on that comment. That is this big decline that you've seen right there. And they really hammered down on that fact. Don't expect any contribution to Tesla's earnings. Actually expect this to be a drag on Tesla earnings for 12 to 18 months. This was also a rough one. One of the analysts, asked, or I think it was actually a retail investor, asked, how many Cybertruck deliveries are you expecting for 2024? Elon Musk said, quote, "The ramp is going to be difficult. Uncharted territory makes it hard to predict. If I were to predict, we will reach 250,000 trucks a year by 2025, but not by next year." So these two comments really beat down expectations for the Cybertruck. We did indeed get the date for the first Cybertruck deliveries, and that is going to be on November 30th. But we don't have the pricing for the Cybertruck, and I think these comments from Elon were really trying to get us prepared for maybe not the best pricing, because although they were pretty optimistic on the Cybertruck as a product, they made it very clear that it's not going to help Tesla earnings for a long time. Elon Musk also says he's worried about the high rate environment and the economy. He reiterated this over and over and over again on the earnings call, almost like he knows something that none of us do. We did get a little bit of good news out of the next generation vehicle from Tesla. Truist Bank, one of the only few analysts that actually had a chance to answer any questions, because Elon just kept talking. So that was a little bit of a disappointment. But Truist Bank basically said the Cybertruck took 3 years in production stages to get to this point. How optimistic or pessimistic should we be about the next generation vehicle production timeline? Elon Musk said, quote, "I would be shocked if it took us another 3 years," similar to like the Cybertruck. "High volume, lower price vehicles are more conventional, so we hope it will ramp faster than the Cybertruck." And this was probably one of the most optimistic points of the earnings call, because he basically said, once we're ready to produce the next generation vehicle, which could be the Model 2, that $25,000 Tesla, it should go pretty quickly. Now, this one was kind of just put down the mic, Elon. Elon Musk said we, as in Tesla, are a hardware company with software projects. When you are valued based on being a software company and not a hardware company, this is not going to help the stock after earnings upon that quote. Elon was asked, can you share the timeline of the next generation project or product? Elon Musk said, not at this time. Elon Musk did kind of reiterate what a lot of people fail to forget is the payment for a Model Y, for an example, is about the same to where it was 2 years ago. The only difference is more money is going towards interest now. So even though the Model Y has went from like $60,000+ down to where it is now, your payment's about the same. Elon Musk also said something that sounded pretty negative in regards to the banking crisis back in March. He went on just a spiel about how the interest rates are too high. There could be pain out there. But he says, quote, quite a few bad shoes still to drop within credit. Credit card debt is rising rapidly. And he also referenced commercial real estate. He said, when interest is 20% and people cannot afford to pay that off already, things are headed in a bad place. Elon did actually reiterate some of the media posts that we had seen recently that radar is being experimented with the Model X and the Model S in vehicles over in China. This was probably one of the worst things as well that came out on the earnings call. They were talking about Giga Mexico and specifically was asked, could Giga Mexico get delayed? Elon Musk said, we're definitely making the factory there. The question is just really one of timing. Interest rates just need to come down. Basically, if interest rates don't come down, they could hold off on starting construction on Giga Mexico. Elon made it very clear that they don't want to go full steam ahead or full tilt, as he said, on Giga Mexico and go as fast as they can, heading into a lot of uncertainty, potentially even a recession. Elon Musk then reiterated that interest rates need to come down. Elon Musk also said, quote, I apologize if I'm more paranoid than usual. I have PTSD from 2009. He did go on to reference that the funding deal had came through 2 days before Christmas, and if it hadn't have came through back in 2009, payroll would have bounced and Tesla essentially would have went bankrupt. So when he's seeing bad weather ahead, this stormy condition that kept getting referenced on the earnings call, they're going to be more careful rather than not. Elon Musk then went on to again reference that car companies do well during good economic times and not so much during bad ones. Elon Musk also did provide a little bit of clarity why the price was dropped on FSD, and Elon just said simply, we wanted to make it more affordable so more people could try it. I mean, that makes sense to me. Elon Musk was also asked for a rough timeline on the robotaxi. He responded, I'm very excited about our progress with autonomy. FSD drives me all around Austin with no interventions. This same approach will enable Optimus to do great things, but did not go into an exact timeline for the robotaxi. And here is this exact quote that I was looking for. Quote, we are working on factory design and laying the groundwork to start construction. We want to get a sense of the global economy before we go full tilt in Giga Mexico. I'm worried about the high rate environment. And that was a direct quote from Elon Musk. Elon Musk said, quote, Tesla has the best real world AI team, period. Tesla's CFO said there is a lag in cost reduction versus price reduction. That's why margins are taking a hit in the short term. So at the time of recording this video, Tesla's stock is down about 3.5% in after hours. There just wasn't a lot of optimism around the future of the economy and really a lot of uncertainty thrown on the economy and their expansion plans ahead. We really didn't get any new information. We didn't get a definitive guidance for Cybertruck production next year. In fact, quite the opposite. They went on to say many times it's hard to produce this product. We all knew that, but I think investors wanted to hear a little bit more certainty, a little bit more clarity. We didn't get any clarity on Optimus or any clarity on Robotaxi. Nothing. So I think it was a disappointment for some people that we just had very little clarity on anything and a lot of cold water thrown on the economy as a whole, right? This was probably one of the most pessimistic earnings calls that I have heard in a long time. I actually like the fact that Elon is so transparent that he's willing to say that. I personally like it. The stock investors, not so much. And this is probably why Tesla has increased their cash and cash equivalents in the last quarter by about $3 billion. This is up 24% in the last year, now sitting at cash and cash equivalents of $26.077 billion. Last quarter, you were at $23 billion. So you've increased this by about $3 billion, $2.3 billion of which came from raising capital, from selling leases. We covered this over the last couple of weeks. Tesla has been doing this, 2 rounds actually, totaling about $2.3 billion. And with the $0.8 billion, about $800 million in free cash flow, they added $3 billion to their cash pile. This is good if the situation in the economy does get worse. Tesla's in the best position now to be able to withstand that. And I think that's a lot of the reason why Elon, really didn't provide any update on Giga Mexico. If we were to go into a recession, next month or next 3 or 6 months, Elon doesn't want to be caught in a project that's going to cost $5-10 billion to get up and running. And then after that, how long does it take for the factory to become profitable at that point? It's many, many billions of dollars Elon has to commit once they actually break ground on that factory. So I think they're being just cautious here. Investors in the short term don't like that. I personally love that. You don't want to be, balls to the walls, for a lack of a better word, right before you go into a recession. And who knows? Elon said it's very dependent on interest rates. If interest rates were to fall, Elon's a lot more confident in the economy. If interest rates stay higher for longer, then he's not. That's just the bottom line to it. And I agree with what Elon said. So don't get me wrong. I love the fact he was transparent. Again, the stock does not. Now, if we just look at the raw numbers that we got today from Tesla, adjusted EPS of 66 cents versus the Wall Street estimate of 74 cents, revenue of 23.4 billion. The estimate was 24.06 billion. The basic EPS of 58 cents. Most people look at the adjusted, so basic really doesn't matter all too much. Free cash flow. This one really just boggles my mind. Free cash flow, again, came in at 848 million. Wall Street's estimate was 2.59 billion. That was not the real estimate. I have not heard that estimate at all. Most people were estimating around 1 billion, which was really similar to what we had seen, last quarter. Last quarter was $1 billion in free cash flow. The quarter before that was 441 million. The quarter before that was 1.4 billion. Last year's number was 3.3 billion. Nobody expected 2.4 billion for the free cash flow number. That was just, off the walls. But what big, change you can see this last quarter compared to even the prior quarters is Tesla is massively investing at this point. Your R&D, your capital expenditures came in at 2.46 billion. Last quarter, this was at 2.06 billion. So $400 million more R&D spend, capital expenditure spend, than what you've seen last quarter even. A year ago, year over year, R&D expenses up 36%. So Tesla is massively investing in their operations by growing capacity, by growing their business as a whole. And this will pay off when the economy does get better, when interest rates do fall. Tesla has grown their cash and cash equivalents by 24% year over year. Total automotive revenues grew 5% year over year. Energy generation and storage revenue grew 40%, and services and other revenue grew 32%. Total revenues grew 9%, while total gross profit dropped 22%. Some of the things that hit profitability in the last quarter: Tesla says reduced ASP, average selling price, due to pricing and mix, increase in operating expense driven by Cybertruck, AI, and other R&D projects, cost of production ramp and idle cost related to factory upgrades, and negative FX impact. That's what I talk about all the time. Just so you guys don't know, FX, they mean the dollar. So this is why I reference this in each and every single video, because it does affect earnings. Last quarter, the dollar went up in and of itself about 7%. So that right there caused a hit to Tesla's earnings. Some things that helped profitability was growth in regulatory credit sales, gross profit growth in energy generation and storage, as well as services and other, lower cost per vehicle and IRA credit benefit, and growth in vehicle deliveries despite the margin headwind from underutilization of new factories. We do have this picture that looks like Cybertruck capacity is around 125,000 units for next year. So although Elon didn't give us official guidance, that's probably the best number we have to go off of. Elon did say by 2025, we're probably going to produce around 250,000 units of the Cybertruck. Tesla did also reiterate their guidance for around 1.8 million vehicles for the year. For the full year. They do say, quote, "We are planning to grow production as quickly as possible in alignment with the 50% compound annual growth rate target we began guiding to in early 2021. In some years, we may grow faster, in some we may grow slower, depending on a number of factors. For 2023, we expect to remain ahead of the long-term 50% compound annual growth rate with 1.8 million vehicles delivered for the year. For cash, we have ample liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. Furthermore, we will manage the business such as that we maintain a strong balance sheet during this uncertain period." Tesla has opened up 61 new service/store locations globally in Q3. And this is pretty cool. From the accountant, he says, in the past, Tesla consistently had more interest expense paid than interest income received. That flipped in a year ago, and now in Q3 2023, Tesla netted $244 million in net interest income. That means Tesla's money sitting in the bank is making them more than essentially the debt payment that they have. So as rates even go higher, this is something that is kind of interesting about all of this the last 18 months. As rates have went higher, big companies with a lot of cash have actually made more money on their cash. And I think one of the biggest highlights from Tesla earnings was Tesla Energy's gross margin was 24.4% in Q3, up 33% versus Q2 2023, and up 163% year over year. As Sawyer Merritt says, Tesla hasn't even finished ramping up their Megapack factory yet or opened their Shanghai Megapack factory. Elon Musk also referenced energy on the earnings call, saying it is now the most profitable sector of Tesla's business. Tesla's stock is now really unhappy here in after hours, now down about 4.5%. Again, I think this was a brutal, honest moment from Elon, and even if you don't like the fact that it was so pessimistic, you have to respect it. I would much rather Elon be honest about what's going on rather than not. It's almost like, do you want the good news first or do you want the bad news? I don't know about you guys, but I'll take the bad news first and then give me the good news. Almost like what we got here. Now, at the very least, there's not going to be any false hopes or false narratives around Tesla, the Cybertruck, or really anything else. Things will play out in due time, but we can expect really good things. And I think that just sets the bar lower for other earnings, for other good news. You always want to have a low bar and beat that low bar. You don't want to set the bar super high, especially if you are heading into an economic downturn, in which it's very clear Elon thinks That's a strong possibility. Let me know what you guys think about the earnings call, about the earnings themselves down below in the comment section. If you guys would like to come join the conversation, come talk to me over there, well, check that out. Michael Tyler. Simple as that. You'll find it over there, and we can come have a conversation. Now, still, even though Tesla is going to be a big topic of discussion for a while, there are other things that you need to know heading into the trading day tomorrow with the data, with the economic data coming out with Fed Jerome Powell, and also with this Israeli conflict that could also move the markets. Don't forget that today you still seen a fear move in the markets. You had gold up, you had oil up, you had the dollar up. These are things that affect companies, that will affect the markets, and ultimately affect Tesla. And it doesn't look all too great for tomorrow. So tomorrow could end up being an even bigger red day than maybe it looks like now. It looks like U.S. President Biden has denied the claims that American ground troops will be deployed to Israel and that we would fight alongside the IDF if Hezbollah in southern Lebanon decided to join the war. According to a closed-door meeting earlier today between U.S. President Joe Biden and Israeli Prime Minister Benjamin Netanyahu, it is claimed that President Biden gave Netanyahu his personal blessing and a direct green light for the invasion of the Gaza Strip. Syrian state media is claiming that the Israeli Air Force has struck an unknown target in the south of the country within the last hour. And it looks like that invasion could be imminent. The Israeli Navy and Air Force have conducted several strikes on the Gaza Strip over the last hour. It's also being reported from the IDF Homefront Command. They have announced that they have now established a plan to evacuate all towns and cities in northern Israel that are within 5 kilometers from the border with Lebanon. They had previously announced a plan to evacuate only up to 2 kilometers, but this has now been increased and approved by the Minister of Defense. The Israeli Defense Force has begun to construct a number of field hospitals and trauma centers in the upper and lower Galilee regions of northern Israel, likely in preparation for an increase in hostilities with Hezbollah on the border with Lebanon. So I think it's safe to say that conflict looks like it's probably about to get a whole lot worse. That means the markets could also get a whole lot worse. If you guys would like to come trade with us live in real time, I send out all of my alerts each and every single day. Each time I make a trade, whether it's bullish, bearish, right or wrong, whether I make money or I lose everything, you still get notified. We made some trades today that look like they should do pretty well. We do have some hedges on our portfolios. It's definitely a time in which I think it pays to be hedged. If you guys want to join it, link down below in the description of this video. Now, tomorrow at 8:30 in the morning Eastern Standard Time, we are going to get initial jobless claims. You're expecting 212,000, as well as the Philadelphia Fed Manufacturing Index. You're expecting negative 6.4. You're going to get the Philly Fed CapEx, Philly Fed employment, Philly Fed prices paid, new orders, business conditions, all of that. You really want to watch the prices paid here. If this goes higher and it looks like, prices paid for shipments, for products are going higher, that's what is going to affect the markets. But I don't really think this matters all too much, because at noon, you're going to get a speech from Fed Jerome Powell. So Jerome Powell is kind of going to set the tone. He's by far the more important than any other Fed members. What other Fed members have said recently is that maybe we should just pause here and not even think about raising rates again. That's basically what other members have said, based on the rise in the 10 and the 30-year yields as of recently. So I expect something along those same lines from Mr. Jerome Powell, and the markets might like that, but I think it really depends on this Israel conflict more than anything else, because what we've seen today was a fear move. Let's just be honest there. When there's a conflict in the Middle East, oil being bought is part of a fear move. Oil's not going to go down if there's a conflict in the Middle East. Oil was up 1.33% today. The dollar was up 0.28% today. That's a fear move. Gold was up 1.5% today. That is definitely a fear move. But what's interesting is bond yields actually went higher today. So TLT dropped sending your treasury yields on your 30-year up about 8 basis points to 4.997%. And on your 10-year, yields went up about 6 basis points. So in gold, oil, and the dollar, you've seen a fear move, but in treasuries, you did not. So it's kind of like the worst case scenario that happened today. Half of a fear move took place, but in treasuries, it did not. You want to see treasury yields come down. That's obviously going to be good for the economy, good for our markets at this point, to be less restrictive. That did not happen today, but money still flowed out of stocks. It just didn't go into the bond market. It went into gold, oil, and the dollar. So as far as Tesla stock, you are now trading at about $230 per share here in after hours, and it looks almost certain you're probably going to drop to your 200-day moving average. That is at $213.62 per share. Back here, when you fell down to about 213, 212, this was back here in August, you bounced right at your downtrending line of support. Our downtrending line of support is around 240, basically where we ended the day today. So it's possible that Tesla stock were to be green tomorrow. I think you would have to get really good news coming from somewhere else to get that to happen. It does not look like that's probably going to happen if I were to estimate. You're probably going to fall under 240. You're already at 230. So I would imagine you're probably going to go even lower than that tomorrow. You're way off of any other support level. You're kind of in no man's land here. I think it's almost certain you're going to fall to about 213, your 200-day moving average, before you find any relevant support levels. This is kind of just one big run-up you had back here before last earnings back in May and June. So I don't really see any support levels here. Around 220, you could say that's a psychological support level. Maybe you stop out around there. That's about $10 lower, but I'm not certain of that. You probably need to hit that 200-day moving average. But again, be very careful if you're trading Tesla. Tesla's earnings themselves were actually not terrible. Tesla stock was green in after hours by 2+% at one point. It was, again, the commentary from Elon on the earnings call that did all of the damage. And again, I want to be very clear. I respect Elon for being brutally honest. That's what you want from your CEO. But it's just not good short term for the share price of Tesla, or really for any company, when the CEO is just brutally honest. So let me know what you think about Tesla stock, the earnings call earnings, and what we can see for tomorrow. How low do you think Tesla stock is going to go? Or do you think it's going to bounce from here? Hit the like button, subscribe to the channel if you made it to the end of this video. My name is Michael Tyler. Enjoy the rest of your day, and I will see you in the next one.